Hello together, ladies and gentlemen. Welcome to the Next Gen Eco TV show, where we're looking at innovations and technologies shaping a more just and sustainable future, and in particular, taking a look at the movers and shakers, which actually bring digitalization, innovation to our world. We are super excited of having our dear Laura over here with us. Laura, how are you doing?
Hi. Super excited to be here. Thank you for having me.
Thanks a lot, Laura. We are super excited to dive into your story as well as in your expertise insights to be shared with the people over here, learning about Web3, learning about the Web3 investment world. But before we kick off, let me also say a warm hello to our dear Kim. Kim, how are you doing?
Hello, Amir. I'm doing great today. Thank you so much. I'm looking forward for today's question, what Laura has to tell us, and I'm particularly curious about the hot questions our AI agent or Lisa has prepared for today.
Thanks a lot, dear Kim. Yes, I'm also very excited what the AI agent has to ask. But let's actually delve right into Laura's story. So, Laura, I had the pleasure of meeting you all over the world, I would say. I think in particular in Davos, where we met here and there. So, Laura, you have outstanding, I would say, personality and a lot of energy. I know that you have brought that into your founder life as well into your VC life. You have a very inspiring story, I feel. And I remember talking with you and also listening to a few posts that you have high aims. So I think your next target is reaching 100 million.
Of course.
But let's start at the basis, Laura. Please tell us a little bit about yourself, where you came from and what made you who you are today.
Sure. So again, happy to be here. Let me introduce myself first. I'm Laura Cornelia Inamedinova. I'm currently serve as Chief Ecosystem Officer at Gate.com. We just rebranded from Gate.io to Gate.com. So by the time we're going to be airing live this show, it's going to probably be a big rebrand. So principal at Gate Ventures, the venture arm of the exchange. And I went into crypto in 2016. So when I was still in my last years of college, I had a lot of classmates because I was studying physics who were super geeky, and they were telling me about this magical thing called magic internet money. At that time, when I first heard it, I thought they're crazy, but something sparked my interest. There was something about Bitcoin back in the day that was like, fiat currency is dead and we're going into digital currency. What does it mean? So kind of meddled a little bit about it. Unfortunately, back then I was a broke college student and I couldn't tell my parents, no, sell the house, take a second mortgage, let's go all into crypto. But I bought a little bit here and there. And then after I graduated, I first started working with tech companies as I had a tech background. But then, so it happened that in that 2016, I was approached by this founder. And again, it was a story like from the movie. I was like, Laura, we're going to do an ICO. And I'm like, what is an ICO? Like, well, this is a different way how to fundraise. We're going to have the three W's: website, white paper, and a wallet. And trust me, bro, like, we're going to be successful. I don't know what was with me back then. I was, 21 years old. I had nothing to lose. And I'm like, sure. And he offered me a very good percentage if I'm going to help him to kind of facilitate. Back in the day, it wasn't even called go-to-market, but basically a whole go-to-market and token launch strategy and execution. And we were successful. We raised a couple of seven figures in less than a week. And this is when I was like, I'm not doing anything else. I'm going into crypto. So that was kind of my first step. I came in as more like a freelancer, hopping from one project to the other. I helped one of the OG Layer 1's Waves platform with a lot of PR activities. When Binance even came to Baltics and Lithuania, I helped them a lot with public affair activities. And so it happened that slowly throughout the years, as I was helping projects, I built a reputation, a brand, and I started hiring. So for me, just being a freelancer and being, kind of like a CMO in demand, I went into running a marketing agency called LKI Consulting, which I'm very happy grew to almost 20 people. Now I have a CEO, she's running it. I'm not actively involved anymore. But what this agency helped me to do is not just learn about marketing and how to do all these token launches, but also I have learned a little bit about investment. Because back in the day, I wouldn't be charging only in fiat. I would be charging in native tokens as well. And of course, a lot of projects did very poorly. How those years where, but something good. And then I saw this opportunity that, hey, no matter how much you're going to be charging as your marketing retainer, you're going to be making more money if you're be charging tokens. Because in the beginning, and that comes down to founders' mentality, they don't appreciate tokens. They don't value them as like real money because it's basically just like created kind of like a share. So ready to give much more than pay fiat. Plus, a lot of these projects usually struggle in the beginning. And if you do a good token launch and basically you're a good specialist, you can make that token do very, very well. So some of these projects did amazing multipliers, and that's how I kind of went into sort of like investing per se, not even knowing it's an investing, but then that's where I saw my angle and I went into VC world. So I started another fund called Illuminati Capital with a couple of friends, which again did very well. And then last year, I met some people from Gate, first from the venture arm. I have helped them to host one event in Dubai during token. So it was that token when the city was flooded, but thank God our event was good. But I met the founders, I met the other team members, and then 6 months down the line, last autumn, they approached me again because they were expanding the venture arm and they invited me to join as principal. And then after a month, I was also offered a second kind of title within the exchange, Chief Ecosystem Officer. So my responsibility within the whole kind of Gate ecosystem is twofold. On one hand, I look for interesting projects, founders who we can invest in as Gate Ventures, invest in early stage seed, pre-seed projects, anywhere from like 100K to $1 million, mostly in infrastructure, PayFi, stable coins, DeFi. And then once we invest, I make sure they get the best out of whole Gate ecosystem. That could be helping with listings, doing marketing campaigns, integrations, and so on. And also I'm focused on strategic partnerships for the fund. That would be building relationship with layer ones, other funds to get more deal flow into existing industries. So basically from being a broke college student, not knowing what crypto is and what Bitcoin throughout almost last 10 years, now I am with Gate, working on the fund, and I was super excited being here in a whole journey.
A great story. Thanks for sharing that with us. Very exciting. I just thought of like one key phrase to maybe describe what I have felt from you, but also what I'm hearing from you, and that's just do it. So I think in the university, you just already grabbed the first opportunity and are building an empire out of that with lots of experience and lots of value created for the market. So that's super beautiful to hear. And yeah, thanks for your contributions. And also a big congratulations to Gate to get an amazing talent on board and further push the vision.
I will crop this small clip. I'm gonna send it to my boss. Be like, you see?
Awesome. No, I'm sure the agreement is very high. And Laura, if I may ask one more follow-up question on your journey. So are there any like key moments which like shaped you to find this founder journey? I think you explained that it was opportunity driven and you just being open to create those opportunities, but just wanted to dig in there a bit, maybe to inspire people who feel something in their soul.
Sure. So I'll kind of reframe my answer of more giving value to all the listeners and to provide something tangible, because everyone can talk about themselves, but I want something for everyone who's watching to kind of take home. So first thing, what I determined the factor of my success when I look back is I have never been transactional in the space, because in this space, everyone is chasing a short-term gain rather than focusing on long-term relationships. A lot of these things that I've achieved in terms of clients that I've gotten, opportunities in investment, now in a job, wasn't because I was going and asking for it, because I was building relationships. Even, for example, Gate opportunity came because I was friends with some of the key people within the ventures team, not because I needed something from them. And again, I come from marketing background, so being friends with investors is not going to give you anything. They're not going to be your client. They're not going to really do anything. I was just friends with them because I like people. I genuinely like them. I like to hang out with them. There was a relationship. And because I built that relationship based on kind of mutual trust, respect, not because there was a need for me to get something from them down the line, when they wanted to find a person who they can trust, they remembered me. And that is a common pattern throughout my journey. I build relationships with people I like. I give a lot first. I don't expect anything in return. But down the line, if there is for me a need, now I know I can call probably 100 people, ask something, they'll give it to me. Not because, I'm the C-level at this big billion-dollar business, because I was there for them when they need it. So one key kind of aspect is don't be transactional and don't build a relation because this person has a senior title and they can give it to you. People feel that, especially like investors. Investors know when you're friends with them because you like hanging out with them, or because you're fundraising and need some sort of value. And from this stems kind of advice which I want to give to everyone is, now I get a lot of messages from people, a lot. Probably during throughout the week, I get at least 20 pitches, at least throughout different channels, if not more. And I also get messages from people who either were my friends or people who I needed something from in the past, but they didn't give me. And look, who I'm going to respond first? Of course, people who were there to me, who were my friends, because they were there for me. I feel probably indebted. I want to help them out. But there are a lot of times where people reach out to me who, let's say, left me on red before, didn't help me out, or were just rude and like, hey, Laura, can you help? I'm like, where were you when I was no one? And now I'm someone, now you need something from me. And like, this is such a common occurrence in the space, whereas I would always help anyone, regardless where they are, as long as I see the person is genuine and is there as my friend, not because they want to extract value. And two, and this is another piece of advice, is when you're reaching out to people, especially if you're reaching out to people cold, and again, because I get a lot of messages and all my colleagues or all the venture investors also getting a lot of call messages everywhere, LinkedIn, Twitter, I don't know how they're even getting my Telegram, but they're getting my personal Telegram. They write this message, hello, can we have a call? We want to collab. About what? Or hello, we want a partnership. About what? How? Where? Be specific, check what this person cares about, and write this message in a way, who you are, what's your ask, and what's in it for that person. For example, I get a message, hey, I am a founder or whatever, BD of this project. We have a community of XYZ amount of people with, let's say, potential purchasing power. We want to do partnership with Gate.io because we see we can increase your trading volume by XYZ or additional X amount. Do you want to call? Do you want to have a call? A great message. It's not necessarily for me personally, but I'll refer to someone. So being very clear with what you're looking for and what you're giving in return is the key thing to build relationships with anyone. And trust me, if you phrase it this way, who you are, what's your ask, and what's your gift, your response rate is going to be 10 times higher. I don't know how you even went to this, but I feel like this is the piece of advice I want to give left and right to everyone.
Thanks a lot, Laura. We are like listening and absorbing your knowledge. I think it's very beautiful insights and learnings you are sharing. Firstly, be authentic, be a nice person. I think that's something we should all strive for in the sometimes seemingly cold business world, but that's what gets you on the long term to a successful path. So thanks for making this very clear. Also making clear that one should be value first and provide value to anyone. And that's actually, I think, what Green Crypto and we in Green Crypto stand for in particular. So I think those are like great points, and understanding how to message. I think you're a master over there. Thanks a lot for sharing with us.
Happy to.
Laura, like, do you have any points where you would say avoid those mistakes? Is there like anything in particular which you would say be very careful about, having gone through the founder journey and the investment journey?
So I kind of gonna continue what I was giving a piece of advice. So first, understand if you're a founder, doesn't matter if you want a partnership, you're selling something, or you're fundraising, you need to understand who is your target audience and how to reach them and how to respect their time as well. So again, if you're reaching out, never be the person who be like, first 2-3 messages, hey, let's hop on a call. Write exactly what you want. And again, I'm continuing on the messages, is I get sometimes these messages, let's say someone introduces me, and out of respect for a person who introduced me, I respond like, okay, thank you for reaching out. Can you tell me specifically what you're looking for? Because again, if they want to connect with Gate.io, Gate Exchange, we have 2,000 people. I might not be there even the right person. And they're like, oh, can we please meet in person, or can we have a call? And I'm like, if you want to meet in person, again, I don't write this, but like the context, meeting in person means 3 hours of my day. 30 minutes going in, hour and a half usually meeting, another 30 minutes going back. So that's 3 hours of my time. Call, that's another 30, 45 minutes, and maybe you're the wrong person for me, and maybe you're also wasting your time. So I ask them, hey, can you please write down what is the need? Maybe I'm gonna connect you with the right person. Maybe I'm not the one. And like, no, I want to have a call or I want to meet. It doesn't work this way. Like, be very specific, respect other people's time, because if you're gonna respect their time, trust me, they're gonna read it. If it's something too good to be the path offer, they will accept it. So that's one of the biggest mistakes, kind of continuing on the advice journey. Number 2, when it comes to mistakes, is especially if you're a founder and you're a manager. And again, this comes from my experience first as a marketing agency who worked with numerous projects. So probably throughout my marketing agency days, I worked with more like 200 projects. So I met a lot of different founders, level executives. I would go really deep kind of into the company structure, into team dynamics. Now I see the same things with potential companies we invest in, but usually when the companies are pitching, they're saying everything is okay. When you come as a marketing agency, they kind of give you all your dirty laundry. So there, I see a lot of founders that A, distrust their team, and B, micromanage. If you are a founder who wants to scale and build a big business, we're not talking 10 people company, we're talking 50, 100. You have to be able to trust your team to deliver and give them full autonomy to execute, or just don't hire them. And this we have seen so many times, even with marketing agency. Let's say a founder hires us and we need to take care of all marketing activities. It means they trusted us, they agreed that we're good ones, and then every step of the way, they question us, they give their input. And usually, if it's someone who doesn't have previous market experience, honestly, their advice is not that good because they just don't know. And that's okay, they know all those things. And then you're like, but you hired us, you trusted us. Why you hire us and then tell us what to do? So like, how does it work? Just, if you don't trust us, just don't hire. It's fine. You're spending so much money. And we see this pattern throughout everything. CEOs micromanaging their CTOs, their sales, their partnership, their marketing, everything. And then the problem is that if you're one founder, you cannot physically manage everything. You have to hire someone that you fully trust and just let them do their thing. Have a clear KPIs, have a clear structure, how you're measuring their success and how you're checking in to know if they're going to the right direction. You give them the right tools, which are people, budgets, and sort of sense of power they can do and change within the company, but you let them do their job. Because if you hire someone and you don't trust them, then you're basically A, losing money because you're hiring a person who's doing nothing, and B, you're losing time because you, as the founder, should be focusing on a vision, on strategic direction, rather than on micromanaging your partnership person, your salesperson, how to do their job. So that's key problem I saw really good founders make. And again, we have seen from the agency perspective, founders that come in and they have amazing product, amazing idea. The narrative is there, the team is there, everything, and you're super excited to start working with them. And then after a month, you realize that, hey, this project's not going to work. Not because the project is bad, not because the product is bad. Maybe the CTO and product team is amazing, because the founder is micromanaging, is not allowing the team to make right decisions, and they're not listening to feedback. Another big issue I've seen, and that's another piece of advice for anyone micromanaging them, is being able to receive feedback. And this is the big issue I've seen in marketing days and now in a venture capital, even 10 times more. So in a marketing department, and being kind of marketing department of whatever company, when they hire us, because basically we kind of integrate, we would see this issue. If you hired us, you're paying us a lot of money. Usually it's like 20, 30, 50K a month. We're giving you an advice, strategy, direction from our years and years and years of knowledge. And because you hired us, it means you trust us, and then you don't. But you're paying us, so why are you paying us money? Why you hired us if you don't trust us? Like, hire someone else. And now I see the same thing with founders. So when I'm founders and the pitch, for me, especially when I meet them during events, so it's usually like a first pitch, and I'm talking with them. And again, as I've been in the space for almost 10 years, so it's 2005, so next year is going to be 10 years of me in the space, I know a thing or two. I'm not saying I'm an expert. I'm not saying I know everything, but I know a thing or two. And then you start asking them questions. Why are you doing this way? Or like, we have seen other projects doing X, Y, Z in a specific narrative, not, let's say, succeeding. Where's your strategy? And you try to give them this very gentle feedback, because again, they come to you to raise capital and they become angry. They take this, and again, I put it in a very soft way. I never want to offend a person, their personality. I want to give the feedback for a person to evolve, and they become angry. And then I'm standing there, like, no, you don't understand how this space works. Like, we know better. And I'm like, you come to me. You ask me to go to our IC, our investment committee, to kind of defend your product for us to invest in. And then you're fighting me. Like, that's not how it works. And you might disagree with my feedback, and that's okay. If you're as a founder, you disagree. We can have, a very civilized kind of discussion. So then you as a founder, you come to me, you ask for me to go and to defend your product in front of our IC investment committee, but then you fight me because I'm not your enemy. And then if you cannot take this criticism, and again, it's okay if you do not agree with my opinion, we can have a civilized discussion. But when you take this feedback as some sort of personal attack, you're not coachable as a founder. You're not ready to receive feedback. And again, if you don't trust my knowledge, if you don't think I'm qualified enough, why you're coming to us then? Why you're pitching? If you come to a VC, it means you respect their authority, or you just don't come to them. So this is another kind of, it's sort of like a red flag and advice for everyone who is listening in. You have to be receptive to a feedback. And if the venture capital, whoever, analyst, partner, whoever you're talking to, gives you some sort of advice, some sort of feedback, even if you don't agree with that feedback, look at it from the curious perspective. You want to ask them, why do you think this way? What are the facts supporting your opinion? Where have you seen the data? Or what is your experience with this specific feedback that you know from other projects that they're, let's say, failing, or I need to step up? Take it as a curiosity, because in the end, when you're fundraising as a founder, you want to have your investor to be your partner, to have your back. So of course you want to test them as well. Do they have a knowledge? Can they give you something more than just the money? So it's very much about you being able to receive feedback and being curious where it comes from, but also, again, challenge it in a very respectful way to have the civilized discussion.
Awesome. Thanks a lot, Laura. So we have a lot of golden nuggets over here. And I think if we summarize it, it's precision, communication is king. Leave empowerment be the standard, and have a great team by your side. Very condensed version of what you just shared with us, but thanks a lot. Like me being since 6 years in the startup space, those like knowledge pieces were actually helping you to get to the next level, and very, very kind of you, Laura. So now in this next section, before coming to our AI questions, we would love to get your insights on investments in Web3. So in particular, where is smart capital going in 2025? What do you see in the market?
So when it comes to venture capital, we're looking long term. We're not looking for next 3 to 6 months. That's where retail comes in. That's where you can speculate. So for example, I was never personally bullish on AI agents because it wasn't a long-term play. It was a short-term play, amazing, not a long-term play. Where we're looking from long-term perspective is mostly right now about PayFi and stable coins, because we see that stablecoin usage is increasing. So we're looking into yield-bearing products, into PayFi. So a lot of different verticals that are surrounding stable coins and are benefiting from the increased use of stable coins. We're looking into the founders with, of course, previous experience, but also Web2 founders coming to Web3 space. So I would say our ideal mix is a founding team with some people from successful Web3 products, but also Web2. Because Web3 for the last couple of years was still too much focus on the speculation and increased token prices rather than building real products that bring use case. And we had this joke in our previous funds when we think about the use case of the product, and we ask, what is the use case? Is it the actual product or is it the token? And a lot of problem is the product is the token, whereas actually these are two different target audiences. So smart money right now is looking at the products, think about magical word, revenue. profit, actual sustainable things that unfortunately, I know it sounds dystopian, but no one was caring about for the last like 3-4 years. Everyone's like, if the token is pumping, that's amazing. Unfortunately, we don't have enough liquidity in the space right now. And that's why we didn't have altcoin season so far, because there's just too many tokens and not enough liquidity for people to pump them. That's why we're looking into products that actually solve some kind of issues, that have users, not token holders, users that have clients, that have revenue, and is focusing on being profit positive. And of course, token can be applied there as well, but it has to come from the product. If I see a project and I ask what is the utility, and you start talking about like staking, governance rights, it's not a use case. Use case may be something that is so fundamentally kind of tied into your product and your business model that you can't go without it. And the hard truth, and a kind of hard pill to swallow for a lot of founders, is 80% of projects that are listed right now, they don't need a token. They could be an amazing blockchain powered company which is using regular either stable coins or just crypto without the token. But of course, founders create a token to because they think, hey, it's easier to fundraise. They'll have more interest from investors. They can have some exits from their token holdings, but it's not the real product. So now investors are really moving forward to look for sustainable businesses who have some sort of underlying technology, and the token is part of it and part of the whole kind of ecosystem, rather than a nice added value that is governance, right? Or 8% APY, but it's not sustainable and usually paid from the marketing budget. And the third thing is of course right now we're very much focused on RWA, and we're focused on institutional adoption. We know institutions are coming. We know a lot of liquidity will come from institutions. For institutions are still doing very much vanilla moves. They're focusing on like Bitcoin. They might have metal and a couple of other altcoins like Ethereum, but they're not going anything below. So we're very much betting on these products that will again benefit from institutions coming in. Would it be a product in DeFi? Would it be products around some sort of B2B place for institutions? So anything basically where it benefits institutions coming into this space and bring this extra liquidity, and those products kind of benefiting from that, is something we'll look into as well.
Awesome, great, and thanks for highlighting the different verticals which are of importance, and also important trends to keep in mind also when building. I think this narrative shift and focus shift from only token to actually like revenue was a very interesting one, and I've got like a follow-up question over here. So in the old days, the Web3 investors would only want to fund a token. They were not interested in the equity. They were slightly interested in the token and wanted this Web3 project to also perform a service within the Web3 world. Now we're already talking about how institutions, how Web2 to Web3 is actually a big adoption driver. How does that change how investments are being made? Is there a shift from token only to equity and token?
So again, it really depends on the project and the structure. So I would say right now, even though we're doing mostly tokens, we're looking at a couple equity deals as well. But again, then one thing that founders need to understand is venture capital investment is not grant. It's not charity. It's not, some sort of philanthropic organization trying to support projects. If you want a grant, go to ecosystem-based grant. Venture capital is a business that basically wants to get bigger returns than S&P, bigger returns than whatever API 20-30% you can get in more kind of, nothing is safe in crypto, but more, let's say, safer options. Even though everything in crypto is risky, it's very volatile. But let's say less risky than investing in projects. And basically, when you're going to fundraise from venture capital, you're taking a high-risk loan because you're selling your token for a huge discount in your early days, whatever the tokenomics are, and then investors are going to dump into the market at the higher price because, again, they need to make money either for their LPs or themselves, depending on the fund structure. So you're taking high risk loan, but you're not putting, money as a collateral. You're putting your reputation. Because if one time you're going to fundraise and you're going to fail as a founder, everyone's going to know. And everyone's going to know why you failed. And it's going to be very hard for you to raise second time. So you're putting your reputation on the line, and you're fundraising from these VCs who are here to make multipliers. So of course, they want to make multipliers. They want to get the best deal possible. They want to see, that those 5-10x. Because and then what is the venture capital model? You invest into 100 projects. One project does 100x. It replaces all your other 99% of projects that fail. And you know the statistics, 99% of startups fail. In crypto, maybe the percentage should be a little bit lower, maybe 95, but still the chances of failure are super high. So for us, when we're looking into the model to invest on the terms, it's all about what will make sense for us to make money. And then when the founders come to us and they're showing us, these terms like $100 million valuation, $200 million valuation, I look at them, I'm like, okay, you're giving me $100 to $200 million valuation. You're going to launch. Usually tokenomics for VC round is, let's say, 6 months cliffs, and then it's like a 1 to 2 years kind of lockup vesting, more or less. So it means I'm gonna get my tokens in only like a year or two from whenever you're gonna launch fully. You see what the market is doing right now. How almost every project launch, they have 1 or 2 green candles, and then, as one of my friends says, a Burj Khalifa kind of drop, goes up and then goes down, 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 down. So realistically, how can I be sure if you're launching you have to launch higher than whatever you're selling to me for me to even make some sort of money? If you're not, let's say if you're giving us 5 or 10% of unlock on TGE, for me just to get the principal back, you need to do 10x. If you're $100 million valuation, whatever round I'm investing in, will you launch at $1 billion? A. B, will you sustain that price? Probably not. So then we're looking into these terms and tokenomics, and it just doesn't make sense. So now I personally am only looking for a project that are usually between 10 to 20 mil valuation, usually even lower, because otherwise I cannot justify. I cannot go to my IC because it's not my money I'm investing, but I need to go to IC and defend it. I need to go to our general partner to defend why I think this project is good to invest in. And I cannot justify unless, you have Vitalik, CZ, and, 5 other superstar founders on your cap table. I don't know how you're going to do 10, 20x and to sustain that price. Usually in this space is going to be very, very hard in this market. I mean, yeah, you might have, an altcoins run. We might have a huge influx of capital, but that is a maybe. And will I bet my career and my track record on the maybe? Probably not.
Very enlightening, Laura, and thanks for the amazing contributions here in this small interview, but also in the wider space. Before we throw you not into the Shark Tank, but into our AI tank, hosted by our lovely Kim, I've got one final question for you. For the viewers who are probably new to Web3, who are learning, and whom we want to inspire about our space, whom would you love to see on this TV show sharing about Web3, around technology and sustainability? Maybe you have someone in mind.
Anyone from our portcos. Basically, any founder from our portfolio companies, because I want them to succeed. So I would say these are the people I want to see on the show.
Great. So we'll have a follow-up with you and hopefully find a great candidate over here. Thanks a lot for all the learnings, and I'll hand over to our dear Kim.
Thank you so much. And thank you, Laura, for your insight. It was really inspiring to hear that you took the leap without any knowledge, and that it takes a lot of courage to take this career path on your own and initiative and kindness. So really inspiring. Let's see what our AI agent or Lisa has prepared. So our first question will be, you've helped scale brands, funds, and ecosystems. But when it comes to building global trust in Web3, what's the one thing we still get wrong?
It's a good question. What is one thing we get about Web3 still wrong? I know the answer. Good question. So right now we're in this very, I would say, dystopian phase of the space where a lot of founders are still living in the shadow of 2017-18, where you can launch a project, do it half-assed, and raise capital. And then they also get this belief reinforced by hearing the stories of 16-year-olds that launch a meme coin and become millionaire overnight. Unfortunately, these are just the stories media love to write to get clicks. Right now, launching a business is tremendously hard in the space. And you cannot have 3 months before TG to do a successful TG. You need a year, you need 2 years to build a community. And again, what is a community? It's not airdrop hunters, are not people who come there just to get your airdrop, just to get your tokens for sharing and liking your content. Community who truly believes in your product, who's going to be there, who are not only the ones that are going to be dumping the token in the market when it gets live. It takes a year. Because imagine when you're building a token holders community, you're building like a cult. You're building people who 100% believe in you, and they want to be there, and they want to tell their friends, their family, and whole. So it takes time, it takes effort building community, trust, getting the right partnerships, talking to exchanges, talking to investors. Like if you come out of nowhere without any kind of track record, investors are not going to trust you. So you need to build that. It takes a year just to have decent ICO or token launch, if not longer. So key thing we're getting wrong, it's not 2016. And you miss that train if you're expecting to do an ICO, do half a job for 3 months and raise 10, 20 million.
True. So 100% community is key, and therefore you need trust to build a good community. Okay, so the next question is kind of related to that, I think. We talked about long-term investments and trust building, but what does sustainable growth look like in an industry which is moving so fast?
So here again, I'm gonna be referring some things I've said before, but sustainable growth is people who are there because they need your product, because they like it, and because they believe in the token success. And of course, token holders are not necessarily your users. But for example, if we look at the stock market, you might never be an astronaut, but you believe SpaceX is going to be successful. And you would own a stock of SpaceX because you think Elon Musk is doing something correct, even though you don't need the rocket. So that's a good example what people should kind of take it into account when they're building a community. People might not be your target audience, but they might believe this business is needed, is going to be successful because of you, who you are as a founder, your strategy, your positioning, your narrative, your partners, and so on. So key thing is understanding who are the token holders and the dynamic of them, so they would come for the product and long-term kind of belief of the product rather than short-term speculation. And then number two, who is your actual users, clients who are going to be using your product on day-to-day basis. And in the end, you need to have two marketing strategies, two marketing, not necessarily departments, but basically two marketing kind of angles you're taking, and they're very separate. And once you understand the psychology behind who are your token holders, who believe in your product success, and who are your users, who are there for the product superiority, novelty, for, I don't know, whatever good price point, whatever the benefits are, you're going to be successful and you're going to build sustainable community and client base.
Thank you so much. Totally agree.
Thanks a lot also, Laura, from here. Very inspiring talk. I think the mantra of the startup world has finally caught up with the startup Web3 world. Go and hunt your product market fit, get paying customers, create real value, be in for the long term. So Laura, thanks a lot for taking your time and joining us for this session. We're looking forward to follow the great future of Gate.io and of you, Laura.
Gate.com. We're already Gate.com, not Gate.io anymore.
Yes. There we go. Thanks for that. And yeah, looking forward to your Portco companies and having a few of them up here. All the best from Berlin, and thanks again for your time.
Thank you, Amir, and thank you, Kim, for having me here.
Thank you. It was a pleasure.